Hi, my name is Nurisha Shabla binti Karim Muzamir. My matric number is 822A1279. I will present about introduction. Islamic banking, also known as Sharia compliant finance, adheres to Islamic law which bans the payment or acceptance of interest on loans and investment. This system also forbids investing in companies involved in haram activities like alcohol, gambling, and pot-related products. Since its notable rise in the mid-20th century, Islamic banking has expanded considerably, offering a competitive alternative to conventional banking across various regions. Islamic banking, which serves a wide range of customers, encourages economic justice and stability by offering products like profit sharing, mudarabah, cost plus financing, murabaha, joint ventures, musyarakah, and sukuk Islamic bonds.
Islamic banking is a system of banking activity that is consistent with the principle of Islamic law, Sharia, and its practical application through the development of Islamic economy. Some of the key characteristics of Islamic banking include, number one is profit maximization and resource allocation. Islamic banks aims to maximize profit like conventional banks, but they do so within the framework of Sharia. Within prohibit certain activities such as interest riba, speculation gara, and investment in business considered haram forbidden. Resources are allocated to invest that are socially responsible and contribute to the real economy, avoiding industries such as alcohol, tobacco, and gambling. Number two is risk sharing vs risk transfer. Islamic finance is based on the principle of risk sharing, where the bank and the client share both profit and loss. This is contrast to conventional banking, where the risks are often transferred to one party through fees, invest rates, or insurance. Most financials such as mudarabah, profit sharing investment, and musyakarah joint venture embody the risk sharing principle. Next is compliance with Sharia law. All products and services offered by Islamic bank must comply with Sharia principles, which are interpreted by Sharia scholars. Transaction must be accepted back, and the bank income must come from legitimate trade and business activity. Next is financial intermediation. Islamic bank acts as financial intermediaries by channeling funds from saver to investor, but they do so through Sharia compliance. Most of financing such as murabaha, cost plus financial ijaharah, leasing and salam, and istisna forward contract for commodities. Next is control basis. Islamic bank transactions are based on the contract that define the right and obligation of each party. These contracts are derived from Islamic jurisprudence and include mudarabah, musyakarah, murabaha, ijarah, and others. Balance sheet structure. The balance sheet structure of an Islamic bank reflects Sharia compliance activity. It includes investment account, where depositor share in profit and loss, and finance assets are based on taxable good or service. Overall, Islamic banking operates within a framework that emphasizes ethical and equitable banking practice, with a focus on real economic activities and the avoidance of speculative and interest-based transactions. Its unique characteristics that is apart from conventional banking system and cater to the needs of individual and business seeking Sharia compliance financial service. That's all for my part. I'm passed to my partner.
Assalamualaikum, my name is Umi Rashida binti Ishaq. My nomenclature is A22A1255. So the degrees of stability influenced by factors like regulatory frameworks, economic condition, and operational practice. Islamic banks operate under principles that prohibit interest and emphasize risk sharing and asset-based financing, potentially fostering more conservative lending practices and reducing exposure to speculative risk compared to conventional banks. This approach may enhance stability by aligning banking activities with real economic transactions and promoting financial prudence. However, Islamic banks also face challenges such as the complexity of ensuring Sharia compliance and the availability of Sharia compliant financial instruments. The stability comparison between Islamic and conventional banks depends on the specific market dynamics and regulatory environments. Both types of bank aim to achieve stability, but their approach and risk management strategy may differ significantly due to foundational principles guiding their operation. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Fairuz Afifi bin Jamaluddin and my matric card number is A22A1191. I want to present about the legal framework in Islamic banking. The legal framework refers to the set of regulations, law and guidelines that govern the operation of Islamic bank to ensure they are compliant with Sharia law or Sharia compliance. This includes principles such as the prohibition of interest, riba, qarar and maisir, engaging in ethical investments, and ensuring risk is shared between the lender and borrower. The framework ensures all banking activities align with Islamic ethical standards. Next, I want to present about the Sharia incorporated jurisdictions. First, which incorporate in various degrees Sharia into the substantive law of the land. Second, have aimed at developing harmonized Sharia standards for Islamic banking, although variations reflecting local standard persists. Third, for the result, these jurisdictions have different approaches to the type of institutions that are permitted to conduct of Islamic banking. Second, I want to present about the purely secular jurisdiction. These jurisdictions have aimed at enacting legislative changes to ensure a level playing field for Islamic finance products, while not necessarily incorporating Sharia elements in the substantive law of the land. That's all from me. Thank you.
Assalamualaikum and hi, my name is Abdul Rahman Bayuhan. My matric number is 822A1176. I will share about corporate governance. Corporate governance is the system of rule, practice and process by which a corporation is directed and controlled. It involves balancing the interests of a company's many stakeholders, such as shareholder, senior management executive, customer, supplier, financier, the government and the community. First is Board of Directors. The board is responsible for the overall governance of the company, setting its strategic direction and overseeing the management performance. It includes independent directors who are not part of the company day-to-day operation. Second is management. The executive team, led by the CEO, is responsible for running the company in line with the board direction and goals. The third is shareholder right. Shareholders have certain rights such as voting on major corporate decisions and the election of board members. Next is transparency and disclosure. Companies are required to provide accurate and timely information about their financial performance, operation and governance to stakeholders. The fifth is stakeholder interest. Good corporate governance takes into account the interests of all stakeholders including employees, customers, suppliers and the broader community. The sixth is ethical conduct. Companies should operate ethically and in compliance with the law. This includes established code of conduct and ethic policies. Next is risk management. Companies must identify, assess and manage risks that could impact their business. Lastly is accountability. Mechanisms must be in place to hold the board and management accountable for their action and decision.
Next, I will explain about the regulatory framework in Islamic banking. First, licensing. Licensing involves providing information on Sharia compliance, including evidence of a robust corporate governance structure. And then, few jurisdictions apply fit and proper requirements to Sharia Supervisory Board, SSB members and staff in charge of Sharia compliance. Second, liquidity. Liquidity risks are managed through BCBS and IFSB liquidity rules. Jurisdictions have developed special liquidity management instruments like commodity murabaha and interbank markets for Islamic banking. Third is capital. The capital adequacy ratio (CAR) for Islamic banking includes adjustments for the unit source of funds and risk-weighted assets in Islamic finance. The IFSB provides two CAR calculation formulas. First, a standard formula assuming investment account holders bear all risks, and a discretionary formula incorporation and alpha factor to reflect the extent of loss sharing by investment account holders.
Next is transparency and disclosure. It is important to give the authorities and the public a clear understanding of Islamic bank strategy and risks. Can ensure adequate information on portfolio distribution, illiquid assets, risk factors, internal controls, and performance calculation methodology. The incorporation of AAO-IFI according standards into the legal and regulatory framework is moving slowly. Even many countries still rely on IFRS or national standards. The level of information disclosed is different between countries and is influenced by the rule of Sharia law and the coexistence of Islamic and conventional banks. Lastly is deposit insurance and bank resolution. Deposit insurance for Islamic bank is very important for just stability. The main challenge is determine the scope of protection, especially for investment account that share profits. A robust approach can determine the alpha factors that helps determine the appropriate level of protection. Deposit protection schemes for Islamic banks vary from a single scheme for all banks to separate scheme for Islamic and conventional banks, usually investing contribution in Sharia compliant investment.
So the conclusion is Islamic banking represents a distinct approach to finance, grounded in the ethical and legal principles of Islam. It emphasizes on risk-sharing, ethical investments, and asset-backed finance offers a unique alternative to conventional banking. The relative stability of Islamic banks is still up for debate, but their track record during the financial crisis and commitment to moral principles shows some of their potential advantage. The growth and stability of Islamic banking depend heavily on the development and harmonization of regulatory frameworks, which guarantee that the industry satisfies stakeholder demands while upholding Sharia law.